What is up, Zinger Nation? It's your boy, producer AB. I should be being joined here soon by Brad from Trading's Ground for some options. We're trying to work out some technical difficulties right now, so it'll just be me hanging out for a couple minutes while we get this worked out. So what I want to do now is just kind of while we're waiting for Brad here we're gonna try to get these technical issues worked out. I'd like to just kind of go ahead and take some tickers from the chat, pull them up here on Benzinga Pro, and see what everyone's looking at. Um, I know for me, I was looking at Apple earlier today, kind of looking at this 5-day chart. See, we saw these highs up here around 124, drop all the way down to 120. So that will be interesting, kind of seeing if something like that will be able to come back. Let's see. No comments yet, no tickers in the chat. Just throw them. Oh, all right, there we go. We got our first one. Palantir. That's a fan favorite. Of course, a Kathy Wood play. So I've got the five day pulled up right here. We can see back back on Monday. Monday was a strong market day. We saw this 5-day high kind of hanging out before we had this resistance at, let me go back here, $24. We've seen growth techs get hit the past couple of days in the market, and Palantir is definitely in that camp, in the growth stock camp. So there's a big question going on right now if that outflow from growth will continue to happen, or if we'll see those growth stocks bounce back, because that is one thing with the growth stocks. When they're more volatile to the bond yields and everything, they will drop quicker, but they'll also come back quicker. I'm seeing someone ask about Square. Same thing with Square. I mean, another growth stock in the Kathy Wood. We look at the 5-day looks a little different here. I mean, it's more of a gradual, continual down climb to this level. And a lot of people are concerned with some of these growth stocks not performing the way that they had anticipated. But if you go ahead and look at the 2-year, you can still see they've had this incredible run up. So in my mind, if I see these drop down to about this 200 level, I think that would be, considered like natural and healthy. But I do expect that uptrend to continue. It becomes more of a question if you're looking at it as a long-term trade or something that you're willing to just buy and hold for a while. Oh, we got Mitchie here to help me out. Mitchie, how we doing?
What's up? What's up, man?
We
I saw you working over here. We're over here in the back. We see you doing your thing. Keep doing
yeah.
your thing, kid.
All right, Mitch is just here for moral support, making sure let's see. So that's what I'm thinking about Square and Palantir. I kind of look at them similarly with with the way growth stocks are performing right now. However, I do think Palantir kind of has a larger upside right now, because we haven't seen with Palantir this continual climb, this big climb that we've seen with of course we did see big climbs with Palantir, but then they came crashing back down. What do you think about Palantir, Mitch?
Wait for it to bottom out, man. Just like the market. One of the things we're in this kind of just in between stage. We need to get out of the in between stage. One of the things I did see is that I expected us to get above 400 on the SPY. But the overall market is not looking like it wants to break over that 400 mark. That's what I think is really the move that makes people rocket. Like if we can get over that 400, it's like a mental hurdle.
Right.
So one of the things is now do we break down on this kind of trend that we've been in? We've been stuck in this trend for a long time.
Yeah, I mean, if I zoom in here, we can see these highs. We got close. We got 398.02 up here.
I thought we had it that day,
And that was back on March 17th. So that was exactly a week ago today.
That's my thought. I'm going to be focused on those levels, because really there's also kind of a little channel that's been built through those 380s, 370s on the downside. So the question is, do we break out through those? I think until we break out through that, you're not going to see these growth stocks get that big boost right back up. If we did get, let's say, through a breakout out of the channel on the top side, like let's say a 405 breakout, a 410 breakout on the overall market, that would excite me, and then we'd see some big moves. But that's what we'll have to take a look here. That's what I'll see. Looks like we have a lot of stocks to chat here. It looks like you might have Brad here, so why
Okay.
don't you work on that, Aaron, and
He said
then
he'll be right back. Are you okay? You want to handle? You want to take over?
he'll be right back. Perfect.
Yeah.
Hey, we'll bring him on in a second, and then we'll actually talk some options. I'll talk a little bit about my option experience. I don't know if you have any option experience, Aaron, but I'll tell you, I suck at options, man. So I need a guy like Brad coming up here.
Yeah, I think
I could trade my ass off on a technical chart like day trading, but I start talking options. That's when we start bringing on Brad, because that's when I know you got to know when you're an expert in something and when you're not an expert.
right.
And options, I just get burned, and it's because probably my time horizon. I probably buy them too short in time horizon. The premium just starts destroying me, and I don't know about you, but they just expire worthless.
I think I've told my options story a couple times on the stream, but I'll go real quick. Just that basically last year before COVID hit, me and a couple buddies were kind of looking at what was going on over in Europe and Italy and everything. And specifically, I remember it was like the Friday night, and Italy canceled all their Serie A soccer games. So, Juventus, AC Milan, all the biggest soccer games just got canceled the night before like that. And me and my buddies are sitting here like, well, that's interesting, because like that never happened with Zika or Ebola or some of these other like diseases that we had seen pop up. And we looked at the markets here, and nothing had changed, and we were like, like whatever. And so I I was working a minimum wage job at the time at a golf course, and I took like my whole checking account, literally like $800, and just bought puts on everything. Puts. My Robinhood account blew up literally on March 18th, the day that was like the lowest day of the market after like a whole crash. My portfolio, it was like the highest point. I turned that $800 into like 10 grand. You know,
Man,
kept everything short, kept everything risky. That 10 grand's gone in a week. So I
hey,
learned the hard way kind of how quickly you can make money with options, and then how quickly you can waste money with options.
oh
Um,
no, no.
Looking back on it, you know what kind of the funniest thing about it I realized after the fact was I was trading put options on Dow. Just take a look at this. Not on the Dow Industrial Average. I thought I was, but I was really buying puts on this company Dow, which is like a pharmaceuticals company or something. And I thought I was buying puts on the Dow Industrial Average, but they were both dropping at the same time, so it didn't matter.
Oh, bro. Yo, that is classic. That is
It
classic.
didn't matter because they were both going down. But then finally one day, like the Dow Industrial Average was down, and this company was up, and I was like, "What the heck?" Like I thought, "What's going on?" Then I realized, yeah, I know it. That was bad.
Damn, maybe.
Oh
Logan
wait,
Logan knows.
we had Brad
Logan
for a
knows.
sec. Now Brad.
I think he's setting up his camera. There you go.
Oh, there we go. Well, let's
I,
see. I mean, I know we've got some.
looks like he's ready. Let's see if we can bring him on and see how he sounds. If anything,
Well, yeah, let's
we'll
go.
keep talking a little bit.
I'm sorry.
Oh,
I,
yeah.
I get like StreamYard for some reason just does not like my setup. Like I run all of my camera through a cam link because I use an external DSLR.
Yeah, I know
And
the life.
it just it hates it. It doesn't like it in Edge. It doesn't like it in Chrome. I mean, I have like
That's crazy. What do you use, a Canon or?
I have a Sony Alpha, and I just run it through a cam link, and I run it through like normally like when I do stuff I do through OBS and it runs fine. But ever since the first time I tried to use StreamYard, I cannot get it to work right. It's just really, really strange. But here we are. So I want to back up Logitech camera.
Well, I know the life, man. No worries. I'm just glad we got you on here, because if it was me talking about options, we wouldn't last long. The accounts would come slim, and the expiration dates would come calling, as they say. So I'm glad to have you on here. I've seen you on before, and one of the things that I think I need to start learning is how to trade more in the money options. So that's you're the expert, man. I'll definitely let you take over.
I appreciate that. Yeah, I do enjoy options. I trade a lot of stuff, but options for I don't know for whatever reason, options just sort of started to work out a little bit more effectively for me. So yeah, here I am.
You got to stick to what you're good at. That definitely has always done. Most people that have been successful in any kind of trading, usually they stick to what they're good at. So
I kind of got to the point to where I was just like, I do a little bit of commons. I trade, shares as well, but I tend to just focus 90% of my trading on options, and I'm perfectly fine with it.
All right. So I'm gonna let you take over here, and if you got your charts or anything, I don't know if producer AB is gonna be with the charts here.
No, I mean, Brad, you'll be able to share your screens if you. I know
Perfect.
You got your kind of advanced your metrics that you like to use as far as the EMAs and everything. So
appreciate that. Yeah, I'll just I'll give you guys a little quick background for the viewers, just to let you know who I am. I've been on a couple of times. I've been on with Neil in the mornings, and I was on with Luke one time during the afternoon show. I taught a boot camp a couple weeks ago, and I'll be doing another boot camp in actually like 2 weeks now. It's coming up real quick. But the boot camps have just been focused around options trading. I am I'm a full-time trader. I am, as I said, primarily focused on options trading. I tend to play not as many commons as I used to. I've sort of focused more of my trading over the last couple of months on options. Not to say, again, I'm exclusively options trading, but primarily all of my trades are going to be options. I am very basic. I don't really get into much advanced option strategies. I just enjoy buying and selling. I don't do the the big iron condors or butterflies and big names like that. I really enjoy just using options as a buy and a sell strategy. So that's what I'm if you want to say good at, I guess. Evidently I'm good at it. I enjoy trading options, and so that's my goal, is to teach others, first and foremost, not to be afraid of options, because I think that's the number one thing that people always come to me and they say, I want to play options, but I'm just so afraid to. They just are concerned that they're going to blow up their account immediately. And with options, it actually, if you're playing on the right side, your maximum risk is defined the second you take a position. It actually makes it a little bit simpler for you when you are first getting involved with trades. And that's what I'm here to do, is just to teach other people how to enjoy using options for their portfolios.
Yeah, of course. And I know, like you said, we've had you on Neil's show, the technical show in the morning, and it seems like you have some good kind of technical indexes that are guiding you in this process.
Basically, it's weird because with right now, with where the market is, you can play the hype stocks, you can play the NFTs, you can play the GameStops, you can play the style of those tickers. But I'm the type of guy that wants to teach the new traders how to use technical indicators. And I, of course, I'm not going to guarantee that your moving averages are going to always give you the right entry. I'm not going to guarantee that the stochastic RSI is always going to point you to an entry. I know that there's a lot of things involved with it, but I am of the type that I use technical indicators in my options trading to give me the best position, or to give me the best shot to make money on that trade. And that's very different when it comes to option traders, because a lot of people are just using, now don't get me wrong, you have to have equal, you have to have a lot of gauging the option chains, you have to have a lot of price action, you have to have a lot of those things. However, but when it comes to looking at an option chain, I also am looking at a chart with my moving averages and with my other indicators that I'm using as well. And so that's kind of where I try to blend the two things together, is technical analysis and options chains with the Greeks and things like that.
Got it. Yeah, and I mean, that's the way I see it. I don't want to put words in your mouth, but it sounds like you're kind of using these different technical indicators as a way to guide you in the process, and not that they're like the end all be all. You see it and then just go ahead and follow them. You're kind of just using them to guide you in the right direction.
Yeah, exactly. And real quick, I'll just mention too, my son's in the background, so if you guys hear him or anything like that, I'm a new dad. I have a 6-month-old son, so my wife's in the office Monday through Wednesday, and Monday through basically every day of the week. I'm a full-time dad too, but he just kind of hangs out over there. He'll just kind of bark every once in a while.
Yeah, so. He just has some input to put in. He has some input about technical analysis, and that's fine. That's good. It's good he's starting early.
You want to talk about starting early? He was like, gosh, we went to the hospital on a Saturday, and we came home. Was it Monday, I think? And then Tuesday, he was on my lap in front of my screens. It was a pretty quick transition for him. But yeah, he's a full-time trader too. He hangs out. I'm a pretty lucky guy.
Well,
so.
you don't have to apologize for that. We're lucky to have you while you're on dad duty. And of course, if you know, he does need anything, then you know, you can go check on that and see if he needs anything, and we'll be able to you know, keep going. I've got my Benzinga Pro pulled up. We can look at whatever charts we need to.
I appreciate that.
Do you what do you use? TradingView, Benzinga Pro? What do you do?
Yeah, I use TradingView. I actually use on my other monitor. I just have the news feed pulled up, and I just let that squawk all day and read news alerts and things like that. For my primary charting software, I use TradingView, and I trade primarily now. I trade through Tastyworks. I kind of migrated there because for options trading, I think they're the best platform for options trading. And so I have decided that if I'm going to focus in completely on options, I trade through them. So that's where I'm at now. But yeah, I could pull up some charts and, whatever. I always start with SPY to kind of, give us an overview of what's going on. That's my #1 ticker that I use as far as, entries and things like that. And it responds really well. So I always start with SPY, but we can take.
Do you just use SPY to kind of get a gauge of how the market's looking, or do you trade SPY as well?
Both. So I watch SPY on the 5-minute all day long. My setup, to kind of give you a real quick overview, I have a bunch of monitors and I've got stuff going on everywhere. But one of the charts that I always have open is going to be SPY. I have the 5-minute chart that I watch. And then the 5-minute is what I take entries on. So I'll watch any ticker is where I entry is with the 5-minute. And then I'm also a big fan of the 1-hour chart, but for SPY specifically, that's my gauge to see what's going on, and I can gauge all of my positions of what I want to do for the rest of the day based upon what SPY is doing, pretty much for the most part.
Yeah. Well, yeah. Like I said, if you want to go ahead and pull that, you can go check on them real quick if you want. I got my.
Okay.
Yeah, take a sec. I'm gonna. So I had U.S. Steel pulled up here, and this is something that someone was talking about in the chat, that with Biden's new bill, and this is something that I've got my eyes on. I mean, obviously we've seen the steel it's been going up not the past, but right here we had this big run up all the way to $25, and there's a lot of people anticipating this big infrastructure bill that might help out with some of these things. So that's some. Oh wait, look. Ooh. Oh, we got, but see, that's all he needed. He just needed to get in the action.
He just likes to hang out. Yeah, he'll probably sit here for the rest of the time and just watch.
There you go.
So this is Thomas, everybody. This is my he's 5.5 months. My wife and I were very lucky to have him. We found out throughout the COVID pandemic all the stuff that was going on, and what a gift he has been. Just still can't believe. So yeah, Thomas is here with us now too. He'll probably just hang out for a little bit.
Oh, that's awesome, Brad.
All right, so let me go up with.
Someone asked me to ask you to ask the little guy if stocks are going up or going to go down.
Well, long term, they're going to go up.
Yeah, he looks like a bull to me.
Yeah, he is. Yeah. We only have one direction in our house, and that's we don't I joke around with guys that I don't like to mess with the stock juju. I don't like to play puts. If I'm a big bull guy, I like to play calls and I like to side with that. So I don't like to mess with the mojo of the markets. So
right.
Real quickly, you can see what's going on here with SPY. It is it doesn't look good. But I think what we kind of have to understand is this is the 5-minute, so obviously we're zoomed in a lot, and the market is just there's so much going on right now with it. I mean, you could see that this movement down here has kind of mimicked itself over the last couple of trading days. We've seen really sharp down moves like this. It's not just the first time it's happening. The problem, I think, with what we're starting to experience with a lot of people that are trading is we're zoomed in on the 5-minute. We can see what's going on, minute by minute, literally. But then when you zoom out on the day trend, and it's okay, well, if you were back here in March, because a year ago, literally, what was it, Tuesday or Monday, I think, was actually, no, it was yesterday, was the year ago was the bottom. It was when we bounced off the bottom, and we've been running ever since then. Now, I'll admit, there's been probably about right here, I thought SPY was going to 400, and then maybe right here I thought SPY was going to 400, and then right here I really thought it was going to 400, and we've had a couple of down days since then. But I mean, you can take a real quick look at what's going on here in the market, and you can see that the overall trend is still pointing us in a direction of we're on our way there. The volatility and a big thing to watch too on the options contracts, the premiums are a little bit different. You can buy SPY contracts, for example, SPY contracts for Friday. The calls are extremely cheap. Right now, SPY is at 387.79, and in the money 387.50 strike call is 220, and that is extremely cheap. Normally, a call for SPY 2 days out that's in the money is double that. You can see that the premiums are reflecting that we're not just going to cruise all the way up to 400, and I think that's why, that's why technical analysis matters. We've got to have something to back up on. We've got to have something to rely upon in a market like this. Like, we can just say all day long, and I'm the same way. We can play stocks, we can play the GameStops, we can play the HOFVs, we can play the style of these big runners and things like that. But at the end of the day, we've got to have some sort of a system that works for us when it comes to trading. My system is a very simple moving average crossover. I use that actually for even commons as well. But I am a big fan of EMAs. And so if you've heard me before on any of the Benzinga stuff, I've talked about this. So I will just show you kind of like a real quick example of what I am talking about. So another one that I use also is the Ripster clouds. I really like the Ripster clouds. I turn it on. I have it on all of my charts. I turn it on and off to kind of give me a little bit of additional confirmation. I know Ripster is a very well-known name. His cloud system is fantastic. I really like it. I have it on my charts. Like I said, I turn it on for an additional confirmation. My two main indicators are the white line will be the EMA 8, and then the green line is the EMA 21. And again, real quickly, just kind of show you what I mean when I'm talking about a moving average crossover, is right here you can see this white line, the 8-day, cross up above the green line. That is going to give me my signal for an entry. And in this case, that's going to be an entry for a call. If I'm playing SPY, I am playing, obviously, real quick flips. I am not holding SPY. First off, I'm not holding really much of anything overnight. I'm especially not holding SPY calls overnight. Very, very rarely will I. And the only time I typically hold a SPY call overnight is like a Wednesday into a Thursday, or something along those lines. I only play the Friday expirations of SPY calls. The Monday, Wednesdays are a little bit too, they're a little too crazy right now. So if I enter a SPY call, it's the Friday expiration, it's a weekly expiration, and I am 99.9% of the time not holding that call overnight because of decay, because of, I mean, there was a day, I think it was last week, that SPY was on its way to 400. We were like 2.5 points away. And then it gapped down like 6 points the next morning or something crazy like that. So there's all this stuff going on in the markets right now. It's really hard to hold calls, because the thing you have to remember with calls is you can take an entry right now where this green is, or the white is crossing above the green. That's an entry for me. That's a long call position. Everything, as you can see, everything looked good on this position. You can take this and hold it overnight, and then tomorrow morning you can wake up, and if SPY is flat, that call automatically has lost value, and now you're down X amount of percent, and you're trying to climb back up in order to, that's the biggest transition when it comes to options trading for those that are primarily, we've got a lot of a mixture of people who are quote unquote day trading right now, but they're not really day trading. Day trading is a very quick in and out, 10-15 trades a day. You are an intraday scalper. You are an intraday trader. You are only trading positions from market open to market close. You hold nothing overnight. And a lot of people are confusing what it means to be a day trader and a swing trader and an options trader, because those are primarily three different strategies. With options trading, you primarily need to go one or the other when you're first beginning. So I always recommend looking at a stock. One of my favorite stocks is NNDM. And right now, it's kind of in our chat, is NNDM is one of our favorite stocks that we play. I've probably played this year alone 200 contracts on NNDM. And I'm not joking. I've played it a lot. Lately, as you can kind of see, it's really not. It's sad. It breaks my heart to watch this. It's getting smacked in the face really bad. And from its highest, from its highest right here at, what is that, about 17-ish, mid 17s, it's down to 838 with not really any strong momentum in sight. But NNDM is one of my most popular stocks that I've played. I've played it the most out of anything in this year of trading. This is a prime example of a stock that you should trade when you are beginning to trade options. And let me show you a couple of things with NNDM that gives you those, or it will back up my claim with that. Number one, as you can see on the chart here, there are no weekly options. There are only monthlies. Options have two different expirations. You either have weeklies or you either have monthlies. Not all stocks have weeklies, but all of them have monthlies. These are the dates that the options expire. If you remember, just last week was the quad witching or whatever it's called. I never can remember the name of it, but it was the day that all of these things closed at the same time. That was also a day of options expiration. A lot of options expired that day. As you saw on the SPY option chain, you can see real quickly, it's a little different. You can see all these W's right here. These are showing you those are weekly options. SPY now, of course, it has Monday, Wednesday, Friday closing. So you could just play SPY calls to your heart's content. It just shows you a little bit more. Weekly options expire a little bit, or they decay a little bit quicker. There's more volume on them and things like that. But the first thing I tell everybody is when you are getting into options trading, find a ticker that doesn't have any weekly expirations. You want to do just these monthlies, and that's what NNDM has. Get into something that has the IV percentage right here, this 144.4%. You want to find a stock that's got some volatility to it. This shows you right here that there is movement on the contract prices. You don't want a contract, or you don't want a stock that's like 20%, 30% IV, because you're going to see these really small movements, and it's going to confuse you. You're going to be buying a contract, and your contract's going to move 5 cents all day long, and you're going to sit there and you're going to watch it, and the stock might go up a little bit more, but there's no movement on the contracts. That's because this IV percentage is real low. So you want to find a stock that's got a good IV percentage. You can go into some of these stocks like GameStop, for example. At one point, the IV percentage was over 300, and that just speaks to the level of volatility that the stock has. It could be $20 now, and it could be $100 the next second, and then $15 the next, and it just goes up and down and up and down and up and down. That's what the IV percentage represents on options. So you want to find something that's in a good spot. It's going to give you some movement, but it's also not going to, like, if NNDM starts running tomorrow, the contract prices are going to go up, absolutely. But there's not going to be this huge fluctuation where you're going to see, like, if you buy in, let's just use this $10 call, for example. Right now, the $10 call is a 50-cent bid. You times that, and it's actually going to be $50. You times any of these prices by the amount of contracts, which is 100, and then you're at your price of what it means to buy one of these option contracts. They all represent 100 shares of the underlying asset of the stock. So this one would be $50. You would buy a contract of NNDM for $50. The strike price is $10. So with this, your goal is by April 16th, close of day, which 4 p.m., you want NNDM to be above $10, because you have to remember your break-even price is going to include two things. Number one, it's going to include your contract premium. It's going to include this price right here. And then number two, it's going to include your commission that your broker charges, because every broker charges something different. A lot of brokers charge 0.65 per contract. Some charge 50 cents per contract. Some charge you like $1 just to open, and then they don't charge you anything to close. So you'll want to check with your broker what sort of fees they do charge in order for you to trade options. So with this contract here, again, you're trying to get the strike price is what you want this underlying stock to be at before the 4 p.m. bell on this date right here. So April 16th, 2021 is a Friday. you want this stock to be above $10. Now, with me, for example, I am not holding this until April 16th at all. I'm gone way before. That's number one with my strategy. And number two, I am not trading options in order to exercise the contracts. I don't want the shares. My goal when I'm trading options is to buy this contract at 50 cents and sell it back like this $1.38, this 340, this 560. You can see as these strike prices, as the strike goes down, and these are what's called in the money stocks or in the money contracts, the premium is much more expensive. I am buying option contracts in order to flip those for a higher premium. So my target anywhere is 10 to 30%, let's say. So I am buying an NDM contract for 50 cents, and I am wanting to sell it back at, let's just say 80 cents, or I'm wanting to sell it back at $1, or, you know, I am looking to get out of that contract flipping premium. I am not concerned at all about just exercising the contract and getting the shares. That is not my style of options trading at all. I'm a day trader of contracts, or if we have the monthly contracts that I play a lot, I am swinging those for a reason. A lot of times with options trading, people automatically assume when you buy this call, you've got to hold it until April 16th. That first off is incorrect. You could buy this call right now, and 5 minutes later, you can sell it, and whatever premium you can collect, that's, you know, so if this went up by $5 and you want to sell it for $5, you just made $5. You have to remember though, your broker is charging you a commission. So deduct from your overall profit how much your contract fee is. Like I said, Schwab is 65 cents per fee, for example. I know them because I used that for them for a long time. So every contract you buy, you are being charged 65 cents to open and to close. So you have to remember on both ends of options trading, you are getting hit with fees, but keep that in mind. But if you want to close that contract out immediately, you can do that. There's nothing like you don't have to hold the contract until the expiration date. That's what a lot of people I think get confused about, is when they're looking at the expiration, they think, well, I have to buy this contract and now I'm holding it for a month and a half and I've got to sit and watch it go up and down and fluctuate and stuff like that. You do not. The expiration date just tells you when you have to, one, either sell the contract by, or two, this is when you have to exercise the contract by. And if you want to hold it between now and April 16th, and then on that day you sell it, chances are that contract is going to not be worth a lot of money. It's going to be expiring worthless is what we call them. And so that's where you come into play with your maximum risk of options trading. So right now, if you're buying this one right here, you are buying this option, it's costing you $50, and then let's just say it's 65 cents for your one contract fee. This option costs you $50.65. Let's say, for example, if you bought this contract today and you let it ride until April 16th. April 16th comes and goes, and NNDM has tanked. It's nowhere near $10. Your option expires what's called worthless. You are now out $50.65. That's the maximum amount of money that you can lose. You cannot lose any money more than that. So that's what is known as a defined risk when it comes to options trading. You don't have to worry about, well, if I'm entering in for $50, my account's going to blow up. I'm going to be out of all of this money. You don't have to worry about that. Whatever you buy the contract for is your maximum risk when it comes to options trading. Now, just the opposite can be true as well. You sort of have this unlimited profit potential on a stock like this. Let's say you buy this contract for $50 right now, and then you hold this contract until, let's just say, next Thursday. Because next week the markets are closed on Friday. So you want to sell it Thursday before Good Friday, April 1st. Let's say that contract or that NNDM has gone up by 3,000%. Whatever, there's no ceiling on your profit for buying a call when it comes to options, because technically, and it's, you know, there are some limits, of course, but technically, just technically speaking, there's no limit to the amount that a stock could go up. NNDM could run $1,000 and that contract price could just go nuts. So when you're buying a call option, your floor, or what you can lose, is the amount of money that you paid for the contract. Your ceiling is infinite. You technically can have an infinite amount of profit when it comes to playing a call option. Now, when you play a put, it's the opposite. When you buy a put, you are expecting the stock to go down. So let's say that you bought this $10 put and it's on the right side of the option chain. You are playing the $2.05 $10 strike. You buy it for $2.05, and as the stock decreases in value, your option price goes up. So you are looking for that stock to just absolutely tank. You want it to go to zero. You want it to be worthless by the time this option expires. Again, the maximum amount of money that you can lose is that price of the put. And as you can see here, the prices are different, because if the closer you are to being in the money, obviously your premium is going to be more. But the prices of calls that are right at the money are much cheaper than a put that is right at the money. These ones are actually very similar. If you go one step down from being in the money, and if you go on a call or a put, it's actually the same price, which is pretty interesting. One other thing I want to show you too, and I'm going to flip back over to my chart. The one other thing you want to see is you want to see some volume on your calls. You want to see some volume on your puts. You don't want to buy an option that's got 3. You don't want to buy an option that's got 0. You want to buy something that's got a decent amount of volume. You could see these, the popular NNDM contracts have a fair amount of volume: 6,000, 4,000, 3,000. 1,000, 3,000, just under 1,000 right there. Shows you that there's some action on these contracts. So a couple of things just to keep in mind real quick when you're buying an option. Number one, you don't want to buy an option that is so far out of the money, like one of these down here. These are called lotto plays. These options, the 2250 is 4 cents. You could spend the $4 and buy this option. The chances are you're not going to have the option's not going to be in the money. You're going to waste the $4. Now, granted, $4 is not a lot of money. However, you have this stock right here this contract right here has a 1% chance of being in the money. I say it's probably even less than that. I really don't anticipate NNDM to be $22.50 in a little over 2 weeks. So you want to avoid the options that are far, far out of the money. They're real easy to play because they're so cheap. And at the end of the day, it's like, hey, I'll just grab a couple, and if they hit, they hit. And listen, I do that. I bought a handful of options today that I use some programs that do unusual activity sweeps. I'll get an alert on an option that's got a volume spike, and I'll buy a $5, a $6, a $7 option. I'll buy a handful of them, because at the end of the day, like if that option moves 5 cents and you've got 20 contracts, I mean, you could do the math. It's like that's a really easy payday on a 5-cent contract move. But again, you have to remember that when you're first starting out, those option contracts, like they're real tough when they're that far out of the money. So keep that in mind. Don't buy really far out of the money options. Number two, your sweet spot on expirations as you're first starting out, you want to play 30 to 45 day expirations. You don't want to play options that are expiring the same week. You don't want to play like 10 days out. You want to play options that are expiring 30 to 45 days out, because what's going to happen with that option, it's going to fluctuate. Automatically, when you play an option, it's like when you buy a brand new car. The second you drive that car off the lot, that option has already decreased. That brand new car that you bought has already decreased in price. If you were to turn right back around and sell it to the dealership, they'd give you a couple $1,000s less. Why? Because you drove it off the lot and the price of the car has now decreased. Same thing with buying an option. You could buy an option contract. The stock doesn't move a penny, but you could try to sell it back an hour later, and what's going to happen? You're not going to be able to get the same amount of money back on it, because the price of the option is working against you. When you are buying calls, every day that you're getting closer to the expiration, that option is naturally losing money. So if NNDM doesn't move a penny between now and April 16th, that option is automatically going to lose money, just because you are fighting against what's called theta. Theta is one of the Greeks, and we'll talk about that at a later time. But theta is one of the Greeks, and it's working against your options. Options have a decay. They decay every single day. Weeklies decay much quicker than the monthlies. Monthlies are a little bit easier to work with. However, they are still working against you. So that's why you want to try to play an option that's 30 to 45 days out. You don't want to play an option that's a weekly, because by the time your stock can get in, like right now, NNDM's in a downtrend. It's not found its bottom yet. It's getting smacked in the face. It needs to find some sort of a bottom before it's going to actually turn around and try to do something. It's not really decided if it's done. You know, it's not at the bottom yet. So it's going to take a little bit of time before you do see like where the bottom of NNDM is. It's going to decay. The options are going to go down in price. You know, I was telling my buddies in the chat today, like, listen, like I want to so badly just load the boat on all of these options. They're so cheap. I mean, these $10 strikes on NNDM are 50 cents right now. just like a couple of days ago, they were over $1. The price has changed so much on this stock, like in a very short amount of time. It's my favorite long-term stock. It's just one of my favorite companies. They're a big one that we play a lot of. DraftKings is another one that we play a lot of. Let's just take a look real quick at what DraftKings is doing. DraftKings is at what, 66.30 now. As you can see with DraftKings, it's got weekly. So DraftKings has weekly options that you can play if you wanted to, but you can see a little bit more on DraftKings. There's what's it called? There's a little bit more volume from a wider range of contracts. With NNDM, the spread is real close to because they don't have, like, NNDM goes 5, 750, 10, 1250, 15, and then so on. With DraftKings, they've got it's dollar or 50-cent increments. So you could see that the volume spread is there's much more of a field of options that you can play from. But you can also notice the range of what your premiums are. I mean, they're running from, where's the highest volume of DraftKings? Let's go with this one. So 260 to 238 is the spread right now on the $65 strike expiring Friday. Let's look actually at a farther out one. We'll get a little bit better of an idea. Here we go. This is better premium. So the 65 right here is, let's call it 510. That's pretty good premium. But then you can look down here and look at one of these. We would call this an unusual volume or an unusual option activity. The $75 strike had 1.5 thousand, the $70 strike had 1.6 thousand, and the $80 had just under 1,000 volume. So that would be an alert for us when we're watching options, when we're looking for some sort of a, this is one of my indicators. I refer to this stuff as an indicator. It's not an indicator as if like a moving average or the MACD or stuff like that is an indicator, but this is an indicator for options trading for me. That there might be something going on here. This is a lot of volume on really far, really high out of the money option contracts right now. So you would want to do some digging and find out, okay, does DraftKings have earnings coming up? Does DraftKings have an event coming up? Do they have something, you know, on their calendar that might cause this stock to spike around this date? If you don't find anything, you know, that doesn't necessarily mean that you shouldn't buy in. However, the opposite is also true. Just because a stock has unusual volume on an option contract does not necessarily mean that you just buy in blindly. Because what happens with option contracts is people will, and I say people, I mean like the market makers, the hedge funds, the whales and stuff like that. They try to throw you off by doing stuff. They'll buy up a bunch of these super cheap premiums. They'll buy 1,000, they'll buy 2,000, and it doesn't, you know, I mean, it's nothing to them. Like the amount of money that they would spend on 1,000 contracts, that's nothing. But their goal is to throw you and I off. So they might buy this $75 strike here. That might have been one person that bought all these 1.5 thousand contracts. And what they're doing is they're buying all of that contracts in order for your attention to shift maybe onto a long-term call position. That maybe DraftKings is on its way to $75. So let's create some activity in this range, because you can pull up the option chain and see $75 strike price had 1.5 thousand contracts sold today. Why did it have that many sold? Well, then we do some digging and we think, you know what? I think DraftKings is also going to go to $75. I'm going to buy one of these contracts as well. Most of the time, you can see that a lot of these big sweeps, they're called, when a market maker or when a whale comes in and buys up all these contracts, a lot of times it's to throw our attention towards like that specific area, because they want us to go that way, when in reality the stock's going to go another way. So that's like an indicator that I use is to find stock or to find options to play is using the unusual volume activity, or using the unusual interest, or any of the other the other metrics that you use for options trading, using those to your advantage. It gives you an indicator that you can trade with, because I mean, really, when you're looking at this option chain right here and you look through all of these, I mean, you can really throw a dart at any of these strike prices from 65 all the way down to 105, really. I mean, there was 157 contracts sold today of DraftKings at $105 DraftKings is not going to be $105 by April 16th. I'm sorry. I love DraftKings. It's one of my favorite stocks. It's not going to be $105 in 2.5 weeks. Somebody bought 157 contracts of these because why? The price was probably super cheap. Right now the spread's a penny to 10 cents. So, I mean, they probably bought those for $5, $10. I mean, you have to remember that don't just go blindly when you're trying to play options. Again, I do it all the time. I play these lotto calls. I have a couple of bucks. I'll just throw at an option. And hey, sometimes it hits. But when you are first starting out to be an options trader, you want to protect your, if you're starting out to be a trader of any kind, your goal right now is to protect your capital. Your goal as a new trader is not to become a millionaire overnight. Your goal as a new trader is not to be some verified guru on Twitter. It's not to run a chat room. It's not to run a website. Your goal as a new trader is to protect your capital. And you have to make smart decisions with no matter, just because you have a large pool to play from. Let's say, for example, you start with $10,000 on your trading account. That doesn't necessarily mean that you're automatically going to make more money. If you can't make money, if you can't protect your capital when it's low, just because you have more of capital to play with, that's not going to automatically mean that you're going to be okay, that you're going to make money just because you have a lot more money to play with. Your goal right now is to protect the capital that you have. And with options trading, it's just as important as if you are making entries on commons. Aaron, are you back? I probably have to step off and take care of Thomas. I don't know if you're back yet or not, but I can hang out for a minute until he comes back. If anybody has any questions in the chat, I've got.
All right, Brad, I'm here.
Oh, perfect. Okay, I was just gonna say, I'm gonna pause right there. I'm gonna go. I'm gonna pause right there. I'll take if we have any questions or anything, I'd be happy to answer those.
Yeah, I'll compile some from the comments before, and so when you get back, I'll throw up my screen real quick, and we'll go through some more tickers from the chat real quick.
That's perfect. Yeah, give me a couple minutes.
Of course, take your time.
Thanks, buddy.
So yeah, I still had steel up because I was, like I said before, we got going with Brad. I've been looking at this, all this anticipation for what could be happening with infrastructure. So another one people have been really talking about are different railroad companies. I know Kansas City Railroad Company, the Pacific. Here, let me pull up this story real quick. Oh shoot, that story's behind a paywall. Here we go. Canadian Pacific and Kansas City Southern agree to combine to create the first U.S.-Mexico-Canada rail network. So I think, wait a minute. Oh wow. So yeah, we can see kind of how this. Oh, chart's like breaking, it jumped so much. There we go. Look at that. So this is after that deal came out with that Kansas City Southern Railroad is going to be making that railroad from Canada, the U.S. to Mexico. And I'm really excited because, there's been a lot of people talking about, when we're going to start putting some money into some of that infrastructure, and it looks like it could be coming soon. Oh, we got Brad. Brad, what do you think about all that? Have you been paying attention to any of that stuff?
Which ticker is it again? I'm sorry.
Well, I'm looking at Kansas City Southern, which is a railroad company, but I was just talking about more in general about how there's been a lot of attention on some of these stocks that are expected to, some of these private companies that are going to be helping out with this infrastructure.
Yeah, I think I haven't really paid much attention to that sector specifically, so I won't say anything yay or nay about it. However, I think that's kind of what we've saw over the last, let's call it, year with the COVID stocks. Everybody was, that's been the biggest influx of traders in the history of the market, I would assume. And so people trying to find that next COVID stock because they got a taste of what it means to get on a stock before it runs 150% or 200% or whatever. It's everybody's looking for that next sector. So I think NFTs, of course, right now are the big things. I've got a watch list of stocks that are, possible NFT plays. And if you get in at the right, I've bought, I bought calls that are way far out expiration on companies that I think might, drop a PR for NFTs. And right now, that's the hot sector. And if you get in on one of those, man, that'll make your whole entire month on trading.
Yeah, I mean, it's just tough because right now a lot of those companies, either the ones that have officially announced anything with NFTs, they've already had their run up, or even the ones that haven't announced anything, but there's been a lot of anticipation, those have also run up.
Yeah, yeah, and it's tough to play. I mean, you're gonna, just the same thing like you would if you buy in like on HOFV, for example. If you bought in at the top and now you're holding HOFV, I mean, it's the same thing like with one of the calls. If you buy a call at the top, it's going to go down. It's going to go down quick, and you're going to be stuck with that, and you're going to be out the premium that you pay. So you have to be careful when it comes to trying to get in on the hot sectors.
Got it. Yeah. Well, I'm going to let you I'm throwing your screen back on. I'll let you keep going through. I've got some background noise going on too, so I don't want to.
Busy night for both of us.
I know. Yeah, it's funny.
Let me grab a couple of these questions. Somebody said, do you prefer volume more than open interest, or it doesn't really go in the factor of picking a strike price? I prefer, you want to have a little bit of a mix of both, for example. So the open interest, as a reminder, if you're not familiar with what open interest is the amount of contracts that have not been exercised yet on an option. So those are always the day before. So open interest shows you yesterday, for example. Volume is as of that minute. So you have to remember that open interest is always the day before. Volume is current, because open interest is going off of the calls that have been exercised. Usually what happens is on an unusual volume spike, the open interest is really, really low. That's what happens like when you see one of these unusual options services or things like that. That's what a lot of times they're basing their activity on, is a stock that's got 20, 30, 40 open interest contracts, and then all of a sudden they've got a volume spike to like 500 or 600. There's something going on there that shows you the difference between the open interest that's real low and then the volume spike that came in out of nowhere. There's got to be a little bit of both. My preference is volume. I want to see contracts that have volume to them, because that typically points me in the right direction. That means I am like, if I'm on one of these contracts that's got 9, 18, 12, 41, 24, I'm wrong. Something, no matter, like I'm missing something. So that's why it's always good to, let me just use DraftKings as an example. So let's say, for example, I'm wanting to make an entry on DraftKings. Now, DraftKings, if depending on what you're looking at it as, it's either topped out right here, or it's trying to recover in this little pocket right here. So let's just say, for example, we're not going to get into a real big technical chart analysis, but just to use the idea of technical analysis and options trading together, and then using your option chain to figure out where you are when it comes to buying one of these strikes. If you're buying, like, let's say, for example, you're charting this stock and you see it at 72 or whatever, you're all the way down here with these far out of the money stocks. And you're looking at your chart and you think that DraftKings has got to go to $72. So, whoops, sorry about that. $72 is right actually at just under this top resistance right here. This big red candle, first off, followed or preceded by this bigger red candle that's preceded by the other red candle, showing you, okay, maybe something is going on with DraftKings right now. You don't want to enter into a stock after you've done your charting, because I think charting is a really important factor when it comes to anything with stocks. You want to look at this chart and see right now, for example, the things that are going to pop out to me are, number one, the 1 hour is where I normally do all of my work, I call it. 5 minute is where I'm playing entries and things like that. The 1 hour in the daily is where I'm doing my work. What's the first thing that pops out here? DraftKings has tried unsuccessfully basically 3 times to get past this $73 range. Had a couple wick spikes over there, but its biggest resistance is going to be right at about $74. Looking at the option chain here again, $74 down, there's not much volume, okay? There's not much in the way of volume to lead me to believe that DraftKings is successfully going to get to that range by April 16th. Now, with that being said, this could change overnight. DraftKings could have a real big spike in volume. It could have a lot of buying, but I mean, the reality of just looking at this chart right now, and this is where this is the pattern where DraftKings is kind of in. It's still not, in my opinion, it's got a little bit more to go down, and before it makes its way, if it is going to make its way back up there, you can see it's got multiple places where it ran into some trouble with these top wicks. So DraftKings, I'm super long term on DraftKings. I think it's a $100 stock. I like the stock. To use that phrase, I like the stock. However, I think we have to kind of be careful with a lot of these tickers because there's a lot of settling going on. And when it comes to options trading, your goal should be to flip premiums, not try to get into a contract that is, okay, so let's say, for example, DraftKings right now is at 66.58. The most I would play on DraftKings right now is probably the 70. And you can see, and I did not do this because of this, but you can see that the $70 call has 1.6 thousand volume, almost 1,700 contracts were sold. This is probably the max that I'm going at. And now right now too, on my entry on this, I would have been on the 5 minutes. I would not even be really entering in on this yet. I would be waiting for another indicator on this. As you can see, my two main indicators are the EMAs, the 8 and the 21. I'm waiting for this to kind of give me a little bit more of an indication. It's trying to consolidate right now. It had a big sell-off here earlier in the day. Right before, that's actually leading up to 4 o'clock. So it did that. I mean, this one's a big sell-off. This one's a big sell-off. Here's some more selling. There's some more selling. There's a lot of selling. There's some more. I mean, there's a lot of selling going on. I mean, all the way back down to here too. There's a lot of selling going on with DraftKings over the last couple of days, this week specifically. I don't see anything that wants me to enter into a long-term position on DraftKings outside of a couple ticks down on the chain. Let me grab another question here too. Cover calls aren't affected by decay. Is it correct? Theta does not affect seller. That is correct. Theta is your best friend when you are selling options. You gain theta. You want that contract to get as close as possible to expiration. Theta works with you when you are selling contracts. It works against you when you are buying contracts. So that's one thing to keep in mind when you are trying to get into. Listen, buying and selling, like if you are wanting to, like, so say for example, when you have to remember when you are selling contracts, you have to do the opposite of what you want to do. So if you think DraftKings is going up, you want to sell puts. If you think DraftKings is going down, you want to sell calls. Like that, you have to remember that that's the important thing, because if you're buying contracts, you have to buy calls because you think it's going up. You buy puts because you think the stock is going down. But when you're selling, you do the opposite. You sell puts if you think the stock's going up. You sell calls if you think the stock's going down. So keep that in mind. But when you're selling contracts, theta works with you. So in this situation here, my personal opinion on DraftKings, I would need to remove that because I think right now DraftKings is stuck in a bit of a downtrend. It's one of those stocks that is it's really trying to find its bottom. It's not quite there yet. It's similar to NNDM. You have to remember that your bias on these stocks means absolutely nothing. Is no matter how much you like a stock. I love NNDM. It's for whatever reason, I love it so much. However, when I'm playing it, I've got to remove my bias, and you've got to do that with any ticker that you play. With the GameStops, with the AMCs, with any of these other stocks. Man, listen, it was a lot of fun those 2 weeks or whatever it was when GameStop was running like crazy, when AMC was running like crazy, when Cost and Express and BlackBerry and Nokia and all these other stocks, they were just, you couldn't keep up with them. That was a lot of fun. And if you played correctly, you made a lot of money. You have to remember, though, that your personal opinion of a stock means nothing on the market. No matter how much you like that stock, that doesn't necessarily mean that you are going to make that stock go up. You have to remember, remove your personal bias, remove what these hype stocks are and stuff like that. Because, again, like I was just saying, your number one priority as a new trader is to protect your capital. And no matter how many times that you could say at night before you go to bed, tomorrow is the day, tomorrow is the day, tomorrow is the day, it does not necessarily mean that tomorrow is in fact going to be the day. You have to rely on technicals. You have to rely on volume. You have to rely on indicators. You have to rely on price action. There's so much. Let me actually show this real quick. This is a really popular book, and I recommend this to any new trader. This is called A Complete Guide to Volume Price Analysis by Anna Cooling. This is sort of like the textbook when it comes to learning price action. I highly recommend you read this book. I highly recommend you consume every single page of this book and learn about price action. Learn about reading price action and volume on a chart. To have a lot of these fundamentals, we will call them, when it comes to reading a stock chart, because there's so many different. I mean, I've got books everywhere that I'm reading like all the time when it comes to stocks. I'm constantly every single day trying to increase my knowledge of trading. I watch YouTube videos every day. I read every day. I'm trying to give myself an advantage, because listen, you guys, we are all up against computers. We're up against market makers. We're up against millionaires and billionaires, and our goal at the end of the day is to beat them, is to get a little bit of that profit. You want to do whatever you can to set yourself up to beat them, to make good trades and to profit. Whatever you need to do that. Listen, I get it. I understand. Listen, as you've seen just in this very short 54 minutes that I've been talking, I'm busy. I'm tired. I sleep like 4 hours a night. I drink like 25,000 milligrams of caffeine. That's probably why I'm just blabbing right now. I get it. We're busy. You've got work. You're trying to do part-time trading. You really want to make trading. You've got a full-time job. You've got a family. You've got, school. You've got all of this stuff to do. I get it, man. Believe me. I've got a newborn baby. I'm doing content creation. I'm trading full time. I'm interacting with a community of people. But at the end of the day, our goal as traders is to improve ourselves every single day that we get behind the screens. Is to make better trades today than I did yesterday. To make better trades tomorrow than I did today. Part of that is reading, part of that is studying, part of that is watching YouTube videos, part of that is watching live streams on Benzinga. But evaluate yourself every single day as a trader. Find out why today your trades went against you. Do you have a journal? Do you keep track of your trades? Do you jot down notes about like, okay, well, I took this trade today at 2 o'clock. It went against me immediately and I lost $20. Why did you lose $20 immediately? Because somebody on Twitter posted this ticker and said this stock's going to the moon, or this stock is going to be the next NFT play, when in reality it's not. They're telling you that on Twitter because they want more people to buy so they can dump their shares, and now you're left holding the bag. That's why all these people have they're holding bags, as you would call it. You don't want to do that. You want to find out, okay, listen, we've all done it. I've done it. I can let you see all of my statements and tell you like where I bought stocks blindly because somebody on Twitter just told me to buy it, and I've done it, and but I've got in my journal why I bought that stock and why it went against me. You want to say, okay, well, I bought this contract. I bought the $65 strike on DraftKings expiring 4/16 because my moving average indicator told me that it was a good idea for entry, or because volume was increasing, or because relative strength was increasing. And you want to evaluate those things on the weekends. You want to sort of build yourself as a trader. Like you want to just do everything in your power to increase your chances to be a good trader. How's that sound, Aaron?
I think that sounds great. And I don't know if you caught kind of my story that I was telling before you hopped on, but right before COVID, when the market crashed from COVID, I was lucky enough to kind of, be trading on an edge, and I turned about $500-$800 that was in my checking account into like 10 grand buying puts on everything. And I kept everything short, and I lost it all within like 2 weeks. And so I didn't have a journal per se, but I used that as like a learning experience. Like, what did I do right? Well, yep. I, took the risk that, in buying these put contracts and stuff, and I, made that quick money, and then my mistake was I kept everything long. I didn't change my trading strategy. I just kept doing the same thing, expecting it to keep working. And then on March 18th, when the market kind of shifted and going back up, I was still holding all these put contracts that just expired worthless. And so since then, I've been able to, when I do get lucky and do make some good trades with options, I kind of know how to use those profits to not just keep doing the same thing, if that makes sense.
Absolutely, and that's great. You got to be able to play both sides of the field. Naturally, most of us are going to be stocks are going to the moon type of people. Like, don't get me wrong. Like, my long-term goal is that SPY is going to be $1 million or whatever, something crazy. However, you look at the chart and you see that obviously is not true right now. You've got to be able to play both sides.
And with that being said, I mean, that's kind of my experience in trading options. It's the same where I'm not trying to actually exercise the contracts. Obviously, I'm just buying the put contracts or call contracts, then trying to sell them back for what it's worth more. But what I don't have experience with is some of these spreads or selling the contracts. So that is something that maybe we can work out together. Maybe you can teach me, one-on-one live. That would help some other people that are kind of in my same boat.
Yep, great idea. That's good. I think once you kind of get an idea of what the like the names are funny and the iron condors and butterflies and things like that. Once you get over like learning the names of all this stuff, these strategies are really can be effective for you. Another thing that is good to learn is, like, if you have a call and the call is absolutely tanking and it's going against you, what can you do in order to sort of hedge that call to not lose as much money? Do you sell a put at this time? Do you do what's called rolling out your call, which means you sell back your call and then you buy a call that's later out of the strike price? There's plenty of things that we could discuss when it comes to options trading, as other than just like buying a call and buying a put.
Right. And like I said, I'm kind of at that rudimentary level where I understand the basics of, like, yeah, I'm going to buy this call if I think it's going up. But really, at the end of the day, there's no kind of rhyme or reason to my strategy with it. And so, yeah, that's something that I would like to learn more from you. And I think our audience would benefit from that too. So we do have to wrap up here, but it sounds like we've got a lot of things we can kind of discuss on further episodes.
You got it, man. I appreciate the chance to chat with you, and same to everybody in the chat. Appreciate that very much. I look forward to doing this more often.
Yeah, and I did throw the Trading Grounds link in the chat. tradinggrounds.live. That's the right link, right?
Yeah, that's the link to you can get real quick. I'll plug our Discord. ITM Trading is our Discord. It's a free Discord community. We don't charge for any of our rooms. We don't charge for like alerts or stuff like that. We are a group of traders.
Yeah, I tried to find the Discord link real quick, but Discord links can be kind of funky sometimes. So
yeah, it's just we have a permanent link. Discord.me/ITM Trading is if you want to find our public page. Discord.me/ITM Trading. It'll send you to our welcome channel, give you all of our rules and stuff like that. Feel free to stop in, send me a message. We can work together personally. We got an amazing group of guys that would love to teach you and help you trade.
Yeah, that sounds awesome. And thank you for joining us. I know kind of while you're on dad duty, you're double tasking there, multitasking. So that's impressive that you're,
Gotta have something going on at all times of the day, man. Gotta have, foot on the gas all day long.
I don't know if it's more impressive or less impressive, because you've got some help over there too, is the other side of it too, right?
I have another set of eyes. You're exactly
right. Well, thank you so much. And I know our fans are grateful for your expertise in this area, because it's something that all of us, I think, want to learn more about.
Well, I appreciate it, man. Appreciate your kind words, and I look forward to doing it again real soon.
Yes, sir. Yes, sir. All right, y'all. All right, Zinger Nation. All right, Brad. Everyone have a great night.
See you guys. See you. You too.